Welcome to the Deep Dive. Today we're looking into a really interesting company, Aether Industries Ltd. They're an Indian specialty chemicals manufacturer. And they have this great motto: we bend molecules to purpose and purpose to progress.
It's quite catchy, sets the tone.
It really does. So our mission today, for you listening, is to sort of unpack their latest corporate news, their financial strategic plays, specifically for the first quarter of fiscal year 2026. That just ended June 30th, 2025.
Right, so very fresh data.
Exactly. And we've got quite a bit to work with: official board meeting stuff, the actual financial statements, their investor presentation.
And even that monitoring agency report on their fund use, it's pretty comprehensive.
It is. It gives us a really a holistic view of what's going on there. All right, let's crack open the books then. When you look at Aether's Q1 FY26, what were the main numbers that jumped out? The headlines.
Okay, so for the quarter ending June 30th, 2025, consolidated revenue from operations came in at $2,561.37 million. Total consolidated income was slightly higher. Ours $2,587.09 million. Then you have the profit after tax, PPT. That was RS $470.20 million.
And EBITDA.
Right, the consolidated EBITDA hit ours $781 million. And finally, basic earnings per share, EPS, stood at ours 3.55.
Got it. Those are the figures. But, how do they stack up? What's the growth story here compared to, say, last quarter or last year? Is it looking good?
Yeah, the growth story is actually quite compelling, especially year on year. So revenue was up 5% compared to the previous quarter, Q4 FY25.
It's okay, solid.
But yeah, the really significant jump is year on year. It's up 35% compared to Q1 of FY25.
35% revenue growth. Wow. In this market.
Exactly. It really highlights their traction. And EBITDA, that showed even stronger growth, up 2% quarter on quarter, but get this, 94% year on year.
94%, almost double.
Pretty much. Now, Pat, the profit after tax, it did dip slightly, about 7% compared to the last quarter, Q4 FY25.
Okay. Any reason for that?
Well, it's still a very strong 57% increase compared to Q1 last year. But yes, it's worth mentioning those exceptional items. About ours, $26.34 million. These are linked back to that fire they had at Manufacturing Facility 2 back in Q3 FY24. Excess insurance premium, other costs. The assessment is still ongoing, apparently.
Right, that fire, I remember that. It shows, even strong companies face these operational hurdles.
Absolutely.
So despite those exceptional items, what about the auditors? Birju S. Shaw and Associates. What was their take? Any red flags or a clean bill of health?
No, it was quite reassuring, actually. Their limited review reports basically said nothing came to their attention suggesting any material misstatement or lack of disclosure.
So essentially a clean bill of health.
Exactly, which is, crucial for confidence in their reporting.
Definitely. Okay, so the numbers look good, the audit's clean. How are they actually making this money? What's the breakdown across their different business lines?
Right. So if we look at the consolidated figures for Q1 FY26, large-scale manufacturing is the biggest piece of the pie. That brought in RS $1,325.22 million.
Okay, what percentage is that?
That's about 52% of the total revenue. Then you've got contract manufacturing at ours, $947.38 million. That's around 37%. And finally, CRAM's contact research and manufacturing services that accounted for ours, $251.35 million, so about 10% of the total.
Interesting mix.
Yeah, but it's important to note, for reporting, they classify it all under one segment: manufacturing of specialty chemicals and intermediates.
Got it. And where are they selling? Is they mostly domestic, or are they big on exports?
Oh, they're definitely global. Exports made up 66.86% of their revenue in Q1.
2/3, roughly.
Yeah, exactly. So the remaining about 33.14% came from domestic sales. That global reach says a lot, I think.
It does. Speaks to their competitiveness.
Yeah.
So beyond the money side, what were the big strategic moves or operational highlights this quarter? What stood out in their investor presentation?
Well, a few things. They're clearly focused on growth. They onboarded 6 new customers across their business models just in Q1.
Always a good sign.
Definitely. And operationally, they completed 11 customer and certification audits successfully. That speaks to discipline, quality control. But maybe the most telling thing is their commitment to R&D. They call it their core R&D-centric approach.
Right, that bending molecules idea again.
Exactly. And they put their money where their mouth is. They spent Rs 168.79 million on R&D in Q1.
How much is that as a percentage of revenue?
It works out to 6.54% of total revenues for the quarter.
Wow, over 6.5%. That's a pretty hefty investment in R&D for this sector, isn't it?
It really is. It's a strong signal. It shows they're not just fulfilling current orders, they're actively trying to innovate, develop new things, stay ahead.
So less defensive, more about capturing future growth.
I'd say so, yes. In specialty chemicals, if you're not innovating, you're falling behind. That R&D spend suggests they're playing offense, looking for that next edge.
Makes sense. Okay, so they're innovating, they're bringing in new customers. What about bigger picture stuff?
Right.
Major investments, partnerships. What's setting them up for the longer term?
Right, they're definitely making some big bets on the future. Two main things stand out: the Site 5 expansion and the Site 3++ expansion.
Okay, tell me about Site 5 first.
So Site 5 expansion Phase 1 is apparently on track. They expect to commission 2 production blocks by the end of Q3 FY26, so maybe end of this calendar year or early next. They got their environmental clearance back in December 23, equipment's ordered, groundwork's done, they've even started installing equipment.
Sounds like good progress.
Yeah, and what's really interesting strategically is they also bought an adjacent 46-acre piece of land.
46 acres, that's quite a bit.
It is. Significantly expands Site 5's potential for, future needs, shows real long-term thinking.
And Site 3+++, what's happening there?
Site 3+++. This is tied to a major partnership. They've signed a 10-year contract-exclusive manufacturing agreement, CEM, with Milliken Chemical and Textile India.
Milliken, the U.S. company.
That's right, the Indian subsidiary of the U.S.-based Milliken & Company. Under this deal, Aether is going to be the current sole manufacturing partner for a key product for Milliken.
Sole partner. For 10 years.
For 10 years, yes. It's a huge deal. Site 3++ will be entirely dedicated to this Milliken product. They're targeting the product launch by Q4 FY26.
That's a massive commitment from Milliken.
Yeah.
And huge, predictable revenue for Aether.
Absolutely. A 10-year exclusive deal like that is, it's a game changer.
No kidding. So these are big projects, Site 5, Site 3++. How are they paying for all this? And, are they using the funds wisely?
Good question. It's mainly funded by the money they raised from their QIP, the Qualified Institutional Placement, back in June 2023. That raised net proceeds of about Rs 7,286 million.
Okay. And is it being spent as planned?
According to Crystal Ratings, who are the monitoring agency for the QIP funds, yes. They reported no deviation from the objects for this last quarter ending June 30th.
That's good to hear.
Yeah, specifically in Q1 FY26, they used about Rs 422 million for the Facility 3 expansion and around Rs 618 million for setting up Facility 5. And interestingly, that purchase of the adjacent 46-acre plot we mentioned, that cost about Rs 59.5 million and is being classified under the Site 5 capital expenditure. It's for common utilities, steam plant, warehousing, that sort of thing.
Smart planning. Makes sense to group it. So how much is left from the QIP?
As of June 30th, the unutilized amount stood at Rs 1,256.3 zillion.
And what are they doing with that? Just sitting on it?
Not exactly. The vast majority, about Rs 1,223 million, is invested in a fixed deposit earning 7.5%.
7.5%. Not bad. Safe and earning a decent return while they wait to deploy it.
Exactly. Seems quite prudent. That FD actually matures very soon, August 12th, 2025.
Okay, so financially prudent, strategically ambitious. Let's switch gears a bit to governance, the foundation, right? What came out of their recent board meeting besides just approving the numbers?
Right. The board meeting on July 24th, 2025. Besides the financials, they approved several key auditor appointments. They appointed Ms. Suresh Isarana and Associates, LLP, as the statutory auditor for a 5-year term, starting now, FY25-26, going through to FY29-30.
Okay.
Also, for 5 years, Ms. Aziran R. Dave and Company as the secretarial auditor. And then for 1-year terms for this current fiscal year, FY25-26, they appointed Mrs. PAA and Associates as cost auditor and Mrs. Riti Chitalia as internal auditor.
Quite a slate of auditors. All subject to shareholder approval, I assume.
Yes, exactly. All subject to approval at the upcoming annual general meeting, which is set for September 12th, 2025. It ensures fresh oversight and continuity where needed.
Okay. Now, speaking of governance and compliance, there was also this notice, was there, from the National Stock Exchange about non-compliance. What was that all about?
Yes, that's important to cover. The NSE issued a notice back on June 27th this year. It was about non-compliance with Regulation 23, the SEBI listing regulations.
Okay, what regulation is that specifically?
It relates to the submission of related party transaction disclosures. This was for the half-year ending March 31st, 2025.
And there was a fine.
Yes, a total fine of Rs 318,600. That includes the base fine of Rs 270,000 plus 18% GST. It was calculated based on 54 days of noncompliance.
Ouch. How did the company explain it?
Well, the board reviewed it, and their official comment was that the noncompliance appears to be a result of a technical issue at the time of submission.
A technical issue.
Yeah. They stated they would work with the NSE to resolve it through mutual coordination.
So a technical glitch leading to a compliance fine. How should we, or, our listener, view something like this? Is it just a minor administrative hiccup, or does it maybe hint at something deeper about their processes?
That's a fair question. I mean, ideally, you want zero compliance issues. A clean record is always best for investor confidence. While they're calling it a technical issue, and it might well be just that, these things do reflect on operational diligence and how robust their regulatory reporting systems are. Frequent issues would definitely be a red flag. A one-off, especially if they address it transparently and quickly like they seem to be doing, is often seen as more of a blip. The key is their response and making sure it doesn't happen again.
That makes sense.
Yeah.
Transparency is key. Okay, so let's wrap this up. We've dived pretty deep into Aether Industries Q1, strong financials, clear expansion plans, that big Milliken deal, prudent fund management.
Yeah, exactly. And that consistent focus on R&D, bringing in new customers, maintaining operational discipline,
Mm.
it really paints a picture of a company that's building methodically for the long haul.
Even addressing that compliance issue proactively.
Right. It all adds up to a company that seems focused on sustained growth, not just short-term gains. They seem to be building a solid foundation.
So for you, our curious learner, here's something to chew on. We see Aether making this big strategic push with the Milliken deal, dedicating a whole facility to contract manufacturing for them alongside their other expansions. How might this shift, this growing emphasis on large-scale, long-term contracts, change their overall business profile? Does leaning more heavily into this contract manufacturing model make them more resilient in the specialty chemicals world, or could it potentially make them maybe a bit less flexible down the road? Something to think about.